Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Monday, March 10th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we were talking about the overhead resistance on the SPX. The index had pushed up into that and we saw the rejection here. We were keeping an eye on that as well as the comp where you had these descending highs and it was testing these recent lows. And I basically left it with saying, let's keep an eye on the comp here. The comp is sort of the weakest of the broad market indices and may sort of give us a tell as to how much selling pressure is out there. When we turn to this week's charts, we see that the comp has continued to break down, that little downtrend there, and now I've got this red line here. Actually on the chart, the comp and all the other indices, this red line is the January lows. And the comp is actually flirting with breaking below those lows. I was saying to watch the comp as sort of an early warning sign is what the other indices might do. So we've kind of got a breakdown right here. Since last week, we see the SPX is now right down. It's still slightly above, but right at its lows. The Dow's holding a little bit above, but look at the rut. It's actually moving right with the comp and breaking below those lows. As far as the takeaways go, I think this is what we call crunch time. I think it's a critical time for the market. If you look at the comp at these lows here, flirting with breaking down, the rut's flirting with breaking down, the SPX is right there. We don't quite yet have a full-scale breakdown, an across-the-board breakdown, but we are definitely right there where if there's buyers out there and you'd like to see them come in, and this is a test as to whether they're willing and able, whether they've got the dry powder to come in and provide some buying power. And this is important because one of the things we talked about a few weeks ago was just looking on the SPX. Basically, you sort of got a downtrend here, you rally up, former support now holds as resistance, and now you've got a roll over here. If you get a breakdown here, basically what we kind of talked about was you've got a very orderly downtrend. And I think that's worth pointing out because just like an uptrend, the orderly component kind of means that it can be self-sustaining for a while. So I think that's really the key here. The panic selling, they run their course, they're fast and furious, and then they tend to be done. The trends, especially the downtrends, can be very brutal. If we look back to the bear market, those who were around after the bubble peak in 2000, one of the things from 2001, 2002 that I vividly remember was just the grind lower. Just lower, 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 and then you get a snapback rally. We tended to call these face rippers because if you had any sort of short exposure, it was just ripped right out of your hands. But anyway, you tend to get these snapback rallies that are very quick, very violent. You try to jump on those, and by the time you recognize the rally and jump on it, it's kind of run its course, and it was just a very frustrating time. So I'm not quite saying we're there yet. We're still kind of at support, at least on the SPX and the Dow. But this week's going to be a critical test, I think. So that's what I'm going to be watching. As always, stay tuned to the blog for further updates.